Alrighty. The name of the game is to get through the top. So I mean, like, curious about a 61% retracement of this move. We're not quite there yet. But the weird thing about it is it's given me the opportunity to draw in like a little 61 area. And then I don't gotta keep all those levels in there. I care about these levels. This is all-time high. So we're stepping on top of the gold bar a little bit there. Enough to draw a trend line, but it's not like I'm eager with it. It's just another one of those like, hey, this is where the people are allowed to trade. The 61s they wanted to work didn't bring them to the B point. And what is it, the 261? It's just not working. Doesn't mean we won't see that B point eventually, but I mean, it doesn't hurt anybody that positioned themselves remotely for a long trade yesterday. I mean, getting that B point should be allowed. Any stops dragged above it are going to get wiped out. But I'm like, I don't care from when. And I think it's just a matter of making that specific time for most people to suffer with this. So I'm like, I'm not going to play that game right now. Breaking again. The 261 likes to get touched from the top. I mean, there's even this level here. It's like, oh, it missed that level. That's interesting. You know, they're starting the day right off the bat with a squeeze, but from what I can see, it's a paddle pattern. Like, it started fast and then it's choppy. Anybody that traded from the 200 and 188 beyond, or pretty much the 161, is likely to get wiped out in one swift go as soon as it's ready. And that's when most people have been stopped out trying to fight against it. Like, yeah, that's a stop killer. This is the 10 o'clock report, so looks like the paddle pattern played out on the report. Came up, stopped everyone out, went down and hit the target, which was the end of the choppy, not the B point, the end of the choppy. The B point could still get hit though, but they took it to the to this point, and if anybody has any kind of buying pressure, it's I don't think the people are for the B point down below, ironically. That target's hit. And I'm like, I know it already hit it, but this is still a B point. It's to be recognized as one. It'll still get hit, just like that. It's not because it works like that all the time, it's just today. Like, usually, I would say about 70% of the time, we would have hit this B point. We would have. It's still a B point, but it's not for those people because they don't know what they're doing. The white dashed line that marks all-time high is only, oh, on the other chart. The white dashed line I marked earlier is only at the 161. By the time we get to the 161 of this fib set, you know, we'll be at new all-time high. Basically containing the people within the volatility of the report. We give them a couple minutes just to, you know, resonate with the level and understand that they're not getting some sort of long-term immediate effect off of the report. So it makes them think that the report isn't affecting it. So then they leave, you know. It's like somebody definitely just signed on for the report, you know, because that's all they want to see. There's people like that. The short attention span people. And it's kind of phasing out the volume from all the people. Like, everybody that gets excited about that report and wants it to do something for them, they're still waiting, you know what I mean? So it hasn't really done anything for them, especially the long-term traders that think there's going to be a long-term move off of it. Well, they've only been given short-term moves. And that's the reality, though. So I find that, like, very important to understand that the market chose to respond in a way that was very minimal, and that tells me that there wasn't an incredible impact from the report. You know, like, there wasn't a, they're trying to phase it out kind of thing. That's my impression. And when I look at what we've done, we've managed to fail countless bearish patterns in the name of just basically staying at the same level. You know, there's tons of bearish patterns that have been, like, quote unquote, leaving people hanging. Like how they treated the people at the 200, how they treated the people at the 261. They gave them a little bit, but then they fought it out of them, you know, really badly, and created many triangles that, you know, weren't even on both sides, like I mentioned, you know, so not giving that fairness that they usually give on both sides of the spectrum. And the name of the game is to get to all-time high and through it. Remember what I said yesterday, when we get to all-time high, it's not about actually going too far past it, I don't think, but we're going to come back to where the old highs were, the white dash line. So anybody that puts a stop above the old all-time high is putting a stop on top of the biggest B point that there is in play right now, the daily. Like, when we look at this chart right here, we get on top of this level, coming back down to test it is really, really easy. Really, really normal. Really, really easy. You know how far that distance can go? Like we could go double this and then come back to it. Like a big S wave. Like that. So all of the people that think they can't handle this move against the market, like you gotta get ready for that. So now that white dashed line has fibs attached to it. 188, like that's 670, 740, above 20,000. So like that area up there, that's the actual 188, 200 to the old all-time high.